Good afternoon. I hope everyone had a wonderful Labor Day weekend. I wanted to give everyone a little bit of commentary on the stock market as it relates to presidential cycles. September and October are typically very volatile months during the fourth year of a presidential cycle, which is to say that in the election year, September and October tend to have massive fluctuations. Typically, September is actually the worst month of the stock market from a historical perspective. But in a presidential election year, October typically tends to be the worst month. So that's just something to think about. Now I'm going to talk a little bit about our normal information in the Finer Wealth Report. I'm Michael Finer from Finer Wealth Management. And for this week's Finer Wealth Report, we're going to talk about issues ending September 8th, 2020. There was a late week sell-off last week as stocks broadly went lower as investors took some profits after stocks actually reached all-time highs earlier in the week. The Dow Jones Industrial Average slid almost 2%, while the S&P 500 slumped approximately 2%. The Nasdaq dropped over 3%, while the MSCI EAFE index, which tracks developed overseas markets, fell 0.62%. Stocks actually hit a wall late last week as the technology companies, which had led the market much higher, slipped in Thursday and Friday's trading, dragging down the overall market. The week actually began on an upbeat note as August momentum continued into the early part of September. While participation in the rally on Tuesday and Wednesday was fairly broad, technology stocks continued to be the focus of market strength. But that sentiment changed quickly on Thursday. With little warning and no obvious catalyst, it remains unclear whether the technology sell-off last week was the result of market technicals or a fundamental change in investor outlook. The coming weeks may provide some clarity in this regard. Last week also saw a series of employment-related reports that evidenced a continued labor market recovery. The Automated Data Processing, also known as the ADP report, showed that private payrolls increased by 428,000 in August, falling short of consensus expectations of almost 1.1 million. However, news turned more positive as the new jobless claims checked in at 881,000, a substantial improvement from the 1 million plus new claims the prior week. Americans receiving unemployment declined by 1.24 million to 13.3 million, half the peak of May. Finally, the monthly jobs report indicated that nearly 1.4 million Americans were added to non-farm payrolls last week, with the unemployment rate actually dropping to 8.4%. The progress was predominantly attributable to some government hiring, primarily of the new census workers, though certain hurting sectors such as retail, leisure, and hospitality sectors saw gains in new hiring. As mentioned, we expect some volatility in the September and October timeframes. We'll talk more next week about that volatility. But at any time, please feel free to give me a call at 978-740-1011 or email me at michael.finer@finer.com. Thanks so much, and I look forward to speaking with you soon.